Welcome back. Now, Astral Foods has released its results for the 6 months ended March. The integrated poultry producer posted a reduction in earnings against the comparative period as margin pressure in its poultry division negatively impacted the group's profits. Astral CEO Gary Arnold joins us now to unpack that performance in greater detail. Thank you so much for your time, Gary. I'll just describe this reporting period, of course, seeing the recovery and rebuilding effort that you are in.
Thank you, Zanati, and good evening. Yes, it's a disappointing result in the context that, last year Astral posted a good set of numbers after 2023 and the episode of load shedding and bird flu, which is well known to the market.
Yeah.
We produced a good set of numbers last year, but that was off very good poultry selling price levels. And unfortunately, for the past 6-month period that we're reporting on now, we traded in an environment, a very competitive environment that saw a lot of retail promotional activity with selling prices lower than the comparable period where Astral posted, very good, robust profits in 2024. So came off those highs, but nonetheless, the numbers presented showed an increase in revenue driven by poultry sales volume growth. So which is a positive for us, unfortunately not at the right selling price.
Yeah.
And we saw good cash generation through the 6 months. So working capital improvements, lower stock poultry inventories, which helped us realize good cash flows. And so a strong cash position at the end of the 6 months. Unfortunately marred by the pressure, though, on profitability.
Yeah, it's quite interesting. I mean, just looking at the fact that the industry is really driving the prices further down. And looking at that margin pressure, of course, with the competitive landscape, was there no kind of remedies that you could pursue in terms of surviving in that kind of selling price environment? And maybe just on the other side, have you reached have you reached the bottom in terms of cost relief there on your side, looking at your operations?
Well, not yet. There are inflationary cost pressures. I think, not unique just to Astral as a poultry company operating within the South African context.
Yeah.
I think inflationary cost pressures have been felt by many businesses across the board. Perhaps what's different in our case is, we went into the 6 months that we're reporting on with higher feed prices, given the drought last year. So weather and its impact on our local maize crop, not something that management has a lot of control over, but feed is 70% of the live cost of producing a chicken. So a significant cost there. And with the drought last year, from that, out of the El Nino weather patterns, we saw a much smaller maize crop, very tight supplies on that old season crop, which did lead to an increase in feed costs. So certainly very difficult to pass that on into the market where, the consumer still remains under enormous pressure. We obviously do what we can. I mean, Astral has a best cost stated strategy. We are producers of affordable protein, so we work very hard to make sure that we can put chicken on shelves that is at that affordable price point. Unfortunately, we're largely price takers on chicken. That's pretty much a characteristic of the industry or sector within which we operate. So we do place a lot of focus on cost, though. Frozen chicken is a commodity type product, so we have to make sure that our costs in line. That part is our job. That's a part that we have all the control over. To some degree, again, of course, because we still have an embedded diesel and water supply cost that we talk about, which runs into millions of rands a month.
Yeah.
But never mind that. We have to make sure that the cost base is in line, and then get a selling price in the market. That selling price is not always easy to achieve, and it's a regular conversation with our customers.
Well, that margin pressure not the only headwind, because there was also the cybersecurity incident. Just give us more insight on that, how it happened and how far its impact went.
Yeah, look, it happened. It was somewhat of a surprise. You hear a lot about these, you hear it in the news happening to other companies. You always believe you are prepared for something like this. Unfortunately, whoever was responsible for this found their way in to our network. Fortunately, though, our monitoring tools and the detection of this was very quick, so we were able to safeguard our systems pretty well, although there were some of our servers that were encrypted. However, we were able to bring these up pretty quickly from backups. So businesses, not across the board, two of our poultry processing operations were offline for a couple of days. So that did impact sales, particularly in the fresh chicken category. And then we had a backlog, as we explained quite well through 2023 with load shedding. The moment you stop processing chickens, they remain on farm. They do get bigger and they keep eating. So we have to make sure that we catch up that backlog in processing, which we had costs to do. We had to put in additional overtime shifts to catch up that backlog, the 2 days. So a significant cost of 20 million rand, so certainly nothing to downplay. But one should turn a negative thing into a positive. We certainly have been able to look at our systems and strengthen them in a number of areas, providing additional layers of security where necessary. And it's given us an opportunity to make sure that our disaster recovery plans and business recovery processes are expanded on. And this will be an ever-evolving field. I think it's something where people are constantly looking to attack companies, and cybersecurity is very topical these days.
Yeah. And actually, Gary, then how are you looking at the second half of the financial year? Of course, still a lot of risks that linger in the macroeconomic environment, but also some things that have provided maybe a little bit of optimism, seeing that some things might get better, at least in the short term. Your take on that?
Yes, Zanachi. I mean, one had, in our outlook, we've paint-colored in, the macroeconomic landscape, which obviously in a South African context has certain risks and doesn't bode well for economic growth. And we saw the unemployment stats last week. So consumer, we foresee in the near future at least will remain under some pressure, but we have to look at the positive. So we've got a bigger maize crop coming for the 25 harvest season. We had a good summer rainfall season, so the crop looking good. A bit late to get in and harvest it with the late wet weather we had, but needless to say, we believe there'll be a 15 million ton crop. So good news for the South African maize balance sheet. Supply side a lot stronger. Zimbabwe and regional countries have had good rain, so probably less exports going forward. This should all mean that SAFEX will trade local fundamentals, and we should see a better maize price going into the second half. We have increased production volumes, given better supply demand dynamics in the market. Our stock levels well under control, and of course we've had to go to the market and look at a price adjustment. One can't keep, we certainly can't keep producing chicken at a loss. We've subsidized the cost of producing chicken the last 6 months. That's not a sustainable business model by any means. So we've approached the market for price adjustments, which, if anything, just cover, your annual inflationary costs. And, so not looking for more than that. We're not trying to profiteer at all, but certainly want to deliver decent return to shareholders and grow and invest in the country and create jobs.
Well, thank you so much for your time and letting us pluck through those feathers, Gary. Really appreciate it. That was Gary Arnold, CEO of Astral Foods.